At the precise moment of this recording, Bitfarms Ltd, trading under the ticker symbol BITF, is exchanging hands at $2.79 per share, marking a sharp and aggressive intraday surge of approximately 11.6% from the opening bell. The stock opened at $2.46, dipped momentarily to establish support, and has since seen a wave of buying pressure that is pushing it toward the $2.80 resistance level. We are seeing volume already exceeding 50 million shares across major exchanges, indicating that this isn't just retail noise. Institutions are repositioning. This move comes against a backdrop of Bitcoin itself fighting to reclaim the $88,000 handle, creating a high beta leverage effect that every trader needs to understand right now. The expectation for Bitfarms has long been simple, perhaps too simple: buy it as a proxy for Bitcoin. The market narrative suggests that if you want exposure to crypto without the hassle of cold wallets or keys, you simply buy a miner like Bitfarms through your Fidelity brokerage account or Robinhood app and ride the wave. That is the expectation. The reality, however, is far more abrasive and complex. Bitfarms is no longer just a mining operation. It is a company in the middle of a radical physiological transformation, shifting from a pure-play crypto miner into a hybrid infrastructure beast that is aggressively converting megawatts into high-performance computing and AI capacity. What you are holding is not just a Bitcoin proxy, it is a distressed power infrastructure play that has just completed a controversial merger with Stronghold Digital Mining and is actively selling off international assets to double down on the United States energy grid. If you think this is just about the price of Bitcoin ticking up, you are missing the forest for the trees. Let's examine the price action we are seeing today, November 25, 2025. The stock has been battered recently, falling from October highs near $4.50 down to the mid-$2 range. This volatility is punishing for the weak hands, but is exactly the kind of dislocation that value-focused algorithms on interactive brokers' trading platforms hunt for. The recent Q3 2025 earnings report was a sober reminder of the costs of expansion, with an EPS miss coming in at a loss of 8 cents per share against expectations of a 2-cent loss. Revenue stood at roughly $69 million, trailing estimates. The market punished the stock for this initially, but today's reversal suggests that the sell-off was overextended. The smart money realizes that the capital expenditure, the spending that caused that earnings miss, is not money burned. It is money planted into the ground at the newly acquired Panther Creek and Scrubgrass facilities in Pennsylvania. We need to discuss the stronghold factor because it is the single most critical variable in the Bitfarms thesis right now. Earlier this year, in March 2025, Bitfarms completed its merger with Stronghold Digital Mining. This was not a standard acquisition. It was a move that confused many retail investors who use SoFi investing tools and look only at surface-level metrics. Stronghold was struggling with debt, but it possessed something Bitfarms desperately needed: power generation assets in the PJM interconnection market, the largest electricity grid in the United States. By acquiring Stronghold, Bitfarms didn't just buy more mining rigs, they bought the power plants themselves. Specifically, they acquired facilities that burn coal refuse, waste left over from decades of mining, to generate electricity. This allows Bitfarms to control its own energy destiny in a way that competitors who rely on hosting agreements cannot. While the market fretted over the debt inherited in the deal, the reality is that Bitfarms secured hundreds of megawatts of power capacity at a time when AI hyperscalers are scouring the planet for every available electron. This brings us to the Bitcoin correlation. Bitcoin is currently trading around $87,975, recovering from a dip that saw it test the low $80,000. The correlation between BITF and BTC remains tight, but we are seeing a decoupling in beta. Historically, when Bitcoin went up 1%, miners went up 2 or 3%. Recently, that multiplier has been compressed because of the halving that occurred back in 2024. We are now over a year and a half past that halving event, and the economics of mining have ruthlessly eliminated inefficient players. Bitfarms survived, but the margins are thinner. This is why the stock price is so sensitive to Bitcoin's moves above $90,000. The psychological barrier of $90,000 for Bitcoin is the breathing room line for miners. Below it, they are surviving. Above it, they are printing cash. I want you to pause for a second and look at your portfolio. Comment below how many shares of Bitfarms you currently hold, and more importantly, tell me if you bought before or after the Stronghold merger. I want to gauge if the audience here is looking at the legacy Bitfarms or the new US-centric version of the company. Now, let's shift to the operational side, specifically the Riot dynamic. For those who have been tracking this stock on Yahoo Finance or discussing it on Reddit, you know that Riot Platforms, another massive player in the space, has been a thorn in Bitfarms' side, previously attempting a hostile takeover and currently holding a significant equity stake. This tension has created a floor under the stock price. Why? Because every time BITF drops too low, the speculation reignites that Riot or another competitor like Mara Holdings might step in and buy the whole company at a premium. It's a game of chicken played with billion-dollar balance sheets. Bitfarms management knows this, which is why they have been so aggressive in poison pill strategies, and now diluting that potential influence by expanding the share count through the Stronghold merger. It's a classic corporate defense strategy. Get too big and too complex to be eaten. Let's talk about the divestiture of the Paraguay assets. This was a move that flew under the radar for many who use passive Schwab intelligent portfolios and don't read the daily 8K filings. Bitfarms sold its Iguazu facility in Paraguay to Hive Digital for roughly $56 million. On the surface, shrinking your footprint seems counterintuitive during a bull market. However, this was a strategic masterstroke in terms of geopolitical risk management. By selling the Paraguay operations, Bitfarms generated immediate non-dilutive cash they did not have to borrow at 10% interest or raise by selling stock and diluting you, the shareholder. They took that cash and poured it directly into the Pennsylvania upgrades and the Washington State facility retrofitting. They are effectively trading emerging market risk for U.S. regulatory security. In a world where tariffs and trade wars are dominating the headlines in late 2025, having your assets on U.S. soil, under U.S. law, connected to the U.S. grid is a premium attribute. The technical setup on the chart is screaming indecision followed by explosion. If you look at the daily candles, we have seen a series of lower highs since October, creating a descending wedge pattern. Today's 11% move is the first serious attempt to break out of that bearish structure. If BITF can close above $2.90 and hold that level, the next technical resistance is not until $3.50, and then the gap fill up to $4. However, if this is just a dead cat bounce, a temporary recovery in a dying trend, we could see a rejection at $2.85 and a retest of the $2.30 lows. Traders using Robinhood stock trading accounts need to be wary of the bull trap. Do not chase the green candle blindly. Watch the volume. If the volume fades by the afternoon, the move lacks conviction. If the volume accelerates into the close, the institutions are holding the line. We must also address the AI pivot. You hear every company mentioning artificial intelligence to pump their stock, from Tesla stock to obscure penny stocks, but for Bitcoin miners, it is real. The same data centers that house ASICs, that is, application-specific integrated circuits, for mining Bitcoin, can, with significant modification, house the H100 and Blackwell GPUs from NVIDIA that power AI models. Bitfarms has explicitly stated their intention to convert the Washington site for high-performance computing. This changes the valuation multiple. Bitcoin miners trade at 5 to 10x earnings if you're lucky. Data center operators and AI infrastructure plays trade at 20, 30, or 50 times earnings. If Bitfarms can successfully prove to Wall Street that they are not just a miner, but a power shell for AI, the stock price shouldn't just track Bitcoin, it should track the tech sector, potentially decoupling from the volatile crypto cycles. However, let's look at the risks, because being a permabull is a quick way to lose your shirt. The difficulty adjustment in Bitcoin mining is currently near all-time highs. This means it's harder and more expensive to mine a single Bitcoin today than it was yesterday. Bitfarms has to constantly upgrade its fleet just to maintain its production, let alone grow it. This is the Red Queen race, running as fast as you can just to stay in the same place. If Bitcoin price stagnates at $88,000 while the difficulty increases, Bitfarms' margins will compress. They will burn cash, and with the debt load from their expansion, cash burn is the enemy.